Okay, welcome traders. We're going to talk about trading with the Trading123 pivots here. Pivots basically measure support and resistance on any stock, future, or forex, and they contain 5 levels here. 5 levels of resistance, R1 through R5, and 5 levels of support, S1 through S5. And you see it's clearly identified here on the chart where the breakouts occur at the R3 level, which is 1003 right here on Friday, August 7th, 2009. Next level up is 107, and then the potential high of the day is 115, which the futures trended up to. Now, if the market was to sell off, you would short at the R3 level once it lost support there at 995, and then it would trend down to 991 and then 983. Now, the pivot levels pretty much act like glue when they're moving up. The price action moves up towards it, and when they're moving down, the price action falls down towards it. So as you see here, we also have the daily pivot, which is 996, and anything moving above this area you would be considered trading long. And then we also have a low pivot, which is a support area, and a high pivot, which is a resistance area. And the areas above those are also breakouts. And then the daily trend is pretty much just similar to the daily pivot. It's just another support and resistance area. So as you see here, the futures ramped up on some echo news at 8:30 in the jobs report, gapped up at the open, and then held. And then they broke out here above 103. As you see, above average volume came in, and up we went to the next resistance area, 107, and then up into 1012. Market pulled back. The R4 level becomes support, and it stayed above that area and trended up right into the R5 potential high of the day of 1015. So if you would have took a long here at 103, first target would have been 107, which would have been a 4-point move. Then it broke out above that area and moved up another 4 to 5 points, and then the trend continued. So you had a potential gain from going long anywhere above 1010 up to 1015 for another 5 points. And then the market sold off in the afternoon here and couldn't get through that high pivot of 1015. And the next support down is the R4 pivot. So you trade it down to that area. So if you missed the morning session, you could have come back and shorted the top anywhere below 1015, 1014, 1012 down to 1007. It's still a 5-point move on 2 contracts. That's a nice profit. 2 to 4 points either way, but that's the way you use the pivots in trading the futures. You trade from one section to the other. R3 is a breakout. That's your major move. You'll see the volume pick up here, and then up it goes to new highs. Pulls back here to the support and then moves up to the R5 level. So this is a very powerful indicator. You can use on stocks or futures. It's very accurate. You have these levels in the morning before the market opens. Actually, they print on the chart at 8 o'clock, the pivot levels. And they're there throughout the entire day, and they stay there throughout the entire day. And your major moves happen above the R3 to R4 and R4 to R5. As you see, the R4 to R5 was an 8-point move. So if you would have got 5 to 6 points of that, it's a nice day's profits. And then shorting, if the market would have sold off, anything below the 995 would have dropped 4 to 5 points down to 991. And then once it took out the low pivot at 989, you got a 6-point move down. So I've been using the pivots for several years, and on major breakout days you can see the R3 to R5 be a 20-point range sometimes, and also on breakdown days when the market was selling off last year and tanking, you 20-30 point moves in the S3 to S5. So that's how you profit trading the futures with the pivots. Buy the breakout areas, buy support, and trade it right up to the next resistance of the R5 level high of day. Bank your profits, and go on to the next trade the next day. Hope you enjoyed the video, and good luck with your trading.